Hi guys, welcome to another video where I'm going to be explaining ICC and the current situation of gold, and I'm going to share my thoughts, my analysis, and what to expect coming into the markets. So today is the 2nd of February 2026, and we're currently looking at the gold chart on the 45 minutes. I use the 45 minutes because it is cleaner, easier to see, and easier to explain, especially for beginners. I want you to really see where the lows and the highs are. If I go to the 1 hour, it is clear as well, but for this video I'm gonna make a 45-minute time frame just to make it a bit more smooth for you to see. Okay, so as we all know, price of gold drastically dropped in the last couple of days. So we had this massive liquidation event. If you trade ICC, there would have been really clean setups on the way back down. I know for myself, I took about 2 setups on the way back down. As you know, when price makes an indication below a swing low, so once price breaks this low, for example, when price broke this low, created this indication, you would be waiting for a correction, right, to take it back down to the swing low. Once price came back to the swing low, created more indication, which again signifies that price is still bearish. It's not yet ready to buy, so you would wait again for the correction. And remember, when you're waiting for corrections, you have to go to a smaller time frame, like the 15-minute time frame or the 5-minute time frame. Personally, I prefer the 15-minute time frame because there's so much liquidity in gold, and the 5 minutes can fake you out pretty easily. So the 15-minute time frame is more solid in my opinion. So once price made that indication, that is when price breaks a low, you would go to a 15-minute time frame and wait for the price to correct, right? And then once it's done correcting, once it breaks structure, you would ride the correction all the way back down. And remember, when you would ride the continuation back down. And remember, whenever you're taking continuation, make sure you're taking it below the swing low. Don't take a correction when it's in between, just right above the swing low, because there is potential that buyers could buy it back up, right? So once price corrected back down below here, price made another indication down here. Sorry, my bad. Price made another indication down here. As you can see, this wick. All right, and then it corrected. And then once price came back under this swing low, you could take the sells back to the swing low. Now, what's happened again when price broke the swing low? It created more downside, which is basically another indication telling us that it wants to sell. And then once price corrected, remember, we're not taking a correction yet, again, until price breaks below the swing low that it created, right? Because in this case, as you can see, the correction was quite deep because it went all the way back down. If you want to compare it to other corrections, as you can see, some other correction, it was just so minor. This was a correction, right? This was a correction, and as you can see, this correction here ended right below the swing low, so it was safe to take it back down. This correction again ended around the swing low, so it was safe to take it back down. Now come over here. When price indicated here, this correction went all the way here, right? And remember, we're not taking it because it needs to come back underneath this swing low before it's safe to actually take the correction back down. But what happens next is, once price goes back above to correct, it comes down but never broke this swing low. So this is an indication, this is a sign that price is starting to flip bullish, because again, there's buyers sitting above here, right? Because the reaction price got the reaction price gets above this low, above the swing low, means there are buyers sitting here, right? Again, same thing applies. When price is above this swing low, there's buyers, right? So we're always waiting for price to come back and drop below this zone where there would be sellers in order to take the continuation back down. So what happens is, buyers stepped into the market pushed price back up to where it had corrected. Remember when we indicated down, price corrected back up. Try to continue, but above this low, because this is a very key zone. This is the zone where if price fell below this zone, then there's a huge potential that sellers would push it back down. And that is the exact same reason why we take our shorts when price is down below this zone. But as you can see, buyers stepped in right at a critical moment, pushed price back up even past this zone, this high that we had corrected to, therefore creating a bullish indication. So now we're no longer thinking sells again, because price didn't break this low, price didn't come back below this low. Instead, price is now breaking past a high. It's now creating a high, creating another indication. And you know what an indication is? Indication basically means a part of the either buyers or sellers are getting the upper hand in the market. That means the momentum is getting bullish. There's more buyers than sellers at this point. So this market is telling us that buyers are starting to step into gold, and it has given us that first bullish sign that it is ready to keep buying up. So my expectation coming into this week, now that we have seen a hint, the market has basically given us a hint that it's starting to get ready to buy. This does not mean we should go in and buy yet. This is just a hint that price is not ready. It's ready. And then we're now expecting some correction back down, right? Remember, whenever we break a swing low or a swing high, we should be expecting a correction. A correction is usually in the opposite direction of the breakout. That's why we don't chase the breakout. We're always waiting for price to come back down, right? It has to hold this low in order to still think bullish. Before you buy, remember, price should not be breaking a low. Now, as long as price does not break this low, it corrects and then starts buying back up. This is a great opportunity for us to enter buys on gold, because now this buyers have now fully stepped into the market, because the previous lows is not protected. It's not breaking. So if we enter above the swing high here, our stop would be right here, and then we could ride this trend all the way back up. Okay, so this is the plan for gold. Right now we're sitting on our hands. You can set your alerts, so when price gets back above the swing high over here, that is your opportunity to buy. Again, if you want to wait for more confirmation, you can always wait for basically price to do this, indicate as he had already done, correct. If you're not certain, you can wait for another indication, and then once the next correction starts, you can now start preparing to take your buys. But if you're confident in this move, you can obviously wait for the correction to be over. It is currently correcting. It could correct all the way back down. You could correct halfway. Once it's done correcting, then you can take your buys above this high, right? Once price gets back above here, you can take your buys all the way back up. And this is a swing trade idea, obviously. If you're a swing trader like me, this would be a good time for you to prepare to get into your longs. But again, don't rush. Just wait for price to correct and then continue back up. Again, your stop loss would be at this low, and your take profit would be at the initial high. I hope this helped, and I'll make more videos like this. Thank you so much for watching. Stay safe, manage your risk, stay sharp, and we'll talk to you again soon. Bye.